So I'm doing a little bit of a different kind of episode tonight. This is not going to be focusing on a particular deal, but I wanted to talk about something just while it's fresh on my mind, just a little bit of a rant, if you will, because I think there's a lot of bad information out there about buying a business with this particular strategy that I'm going to talk about. There's a lot of people out there online that say you can buy a business for absolutely $0 out of your own pocket through getting an SBA loan, that the SBA will lend you 90% of the cost of a $1 million or $2 million business. And then you can go get an investor to put down the 10%. And while a lot of that is actually true, there's some big subtleties in this that don't get talked about often enough that I wanted to just kind of talk through a little bit, because I don't see these get mentioned when these big claims are made. And this can disqualify a lot of people. And I personally have wasted a lot of time just thinking this way and kind of going off some of this bad information. So hoping I can just save some people some time here, learning some of the stuff that it took me a long time to figure out and learn, that I had to kind of learn the hard way. So the reason this is fresh on my mind is we're actually a few months into buying a business, about a $2 million business. And we're using all of these strategies, but the subtleties that I'm going to get into just hopefully can give you a little bit of clarity on whether this is actually something you could do, or whether you need to go do a little bit of hunting for some of the missing pieces in this deal. So the first thing, let's say you find a business for $1 million, right? The actual structure that you're going to see if you go get an SBA loan is that they will lend you a decent portion of that business, but they probably aren't going to lend you a full 90% of the business. Now, they might in some cases, but more commonly, what I've seen at least, is they're going to lend you more like 85% of the business. And then they're going to require a 10% down payment from you, from someone that's involved in the business. And the actual place that money has to come from differs a lot from bank to bank. It's kind of like they have their own requirements, and that sometimes presents an issue. Sometimes the bank will say, well, hey, you as the person that is going to be the majority owner of the business, or you as the person who is going to be running the business or guaranteeing the business with the SBA loan, sometimes they say you have to be the one personally putting down the money. And now that can create a big issue, right? If you're buying $1 million business and you're going in thinking, oh, I can do it for $0 out of my own pocket. And now the bank is saying, well, no, you can't. You have to personally be putting down the $100,000. You can't use the strategy that's being talked about on the internet everywhere, where you just go and you get an investor to put down that $100,000. And some banks allow it, some banks don't allow it. You just have to shop around and find the ones that don't have a problem with it if you're taking this strategy. But that's not even the whole story. So let's say this $1 million business, a lot of times they're going to require that there's some seller financing in the deal too. So you might have found this great business willing to sell for $1 million. And then the bank comes back and they say, okay, well, we're not going to lend a full 90%. We're going to lend 80%. And you need to go get the seller to agree to do 10% seller financing. Now you might have to go deliver that news to the seller, and they might not be down for that. That might ruin the deal right there. Or you might be able to get them to talk you into it. So these are kind of the types of things that you need to know going into it, and just understand you've got to kind of like do a little bit of a juggling act with these types of things. At least this is the experience that I've had as we've been doing this. And then even if you get all of that in place, you get the seller to agree to whatever financing the bank needs them to agree to. You get them to lend 85% of the deal or so. You find an investor to put down the 10%, and you get the bank to actually agree to that as a method. You get all that in place. You still are going to have to come out of pocket, at least momentarily. Let's say you go with the SBA. Most banks are actually going to require that you put $5,000 to $10,000 down as just an earnest money deposit, like a good faith deposit, to get the process started. This is before you're even qualified for the deal. And the process of getting qualified is way more rigorous than people talk about. Like it is complicated. It's a whole lot, and there's a lot that's required of you. They look at, do you have strong W-2 income? Do you have It's not like you have to have W-2. Like you could maybe have it from other sources, but W-2 is kind of like the gold standard for them. They look at, do you have strong W-2 income that could help support this if something goes wrong and the business isn't doing as well as it looks like it would? Is there collateral? Do you own a home, or do you have other collateral that we could go after if the business isn't doing as well? And they have to basically, like for that $1 million business, they have to see coverage for the whole thing. Even if the business owns $300,000 in assets, it's $1 million, and you've got a home worth, let's say, another 400,000, that 700,000 of the $1 million, they're still going to ask that you cover the collateral of that remaining 300,000 somewhere. You're typically going to have to get like a life insurance policy on yourself if you're running the business, and for the excess that's not covered by collateral, because the bank doesn't want to leave any chance that things could go wrong. So these are all things that they just don't get talked about as often, but these are some of the subtleties of like things that you should look out for and expect. And then going back to the good faith deposit, if you were planning on being able to do this whole thing for $0 out of your own pocket, you got the investor, you got the SBA all lined up, you got the seller to agree to seller financing, but then you don't have the 5 or 10 grand to put down, you're not even going to be able to get qualified for the SBA process. They're not even going to let you get the process started or look at the business. Now, you might be able to structure it so that when the business closes, some of the working capital that the business has or that the SBA gives you to run the business, you might be able to structure it so that some of that comes back and reimburses you for that good faith deposit that you put down. But that's after the fact. You don't even know if you're going to qualify yet. You've got to shop it. You got to make sure that the bank qualifies you, and you have to put that money down first. And then on top of that, let's say you do get the investor, there's also fees, like attorney's fees. There's a guarantee fee for the SBA. There's bank fees that get involved. There's packaging fees. There's all this stuff that comes up. So you're realistically going to have to pay more than just the 10% of the actual valuation of the business that you're buying. And if you got an investor to agree to that, they might not be down to pay those extra fees. They might be looking at you to pay those. That's pretty common. They're probably only, unless you're offering them more equity than the 10%, if you're giving them 10% equity for the 10% payment that they're putting down, they're probably only going to want to pay 10% of the valuation of that business. So there might be, for $1 million business, there might be another 10, 15 grand in fees that you have to pay at the time of closing to get the deal across the finish line. And I can tell you right now, they're probably not going to let you just put that on a credit card. Maybe you take a cash advance or something. I mean, that's a way that you could do it. Some risk in that. But these are things that you need to be thinking through. And so it's not quite so simple as just, I'm going to do this for $0 out of pocket. You might come out $0 out of pocket at the very end after the business closes if you've structured it right. But you're going to have to come out of pocket in the meantime. You're going to have to pay an attorney to draft a purchase agreement, unless you want to risk a purchase this big on just drafting something yourself. So there's all these different things to think through. Just wanted to kind of get on the soapbox for a little bit tonight. This has been fresh top of mind because I'm actively going through the SBA process right now and been going through it for a couple months, hopefully near the finish line here, looking like we are. And it's just a lot more complicated than it's made out to be with some of these kind of business buying gurus that are online just saying, oh, you just get 90% funded through the SBA and put 10% down, and that's the end of the story. And I just, having wasted a lot of time, hopefully I can save you the time by not having to make some of these mistakes and going and figuring this out. Because the other part of this equation is, if that is the case and you're not in a position to do that, like maybe you can figure out a way to do it regardless. Maybe you can go partner with someone who is willing to put some of that cash up. They take some of the equity and they get involved in the deal with you. Maybe you have to give them or maybe you give your investor an extra 5% that you just weren't planning on giving, but it takes that to get the deal across the finish line and it's worth it to you. These are some of the things that you got to think through. That's my point. And hopefully if you're someone who is thinking about buying a business and you're thinking about using this strategy, which I think is a great strategy still, you just hopefully you can at least use some of these tips to go and do your homework and get the things in place that you need to get in place before you actually do it. And so that you don't lose the deal that you work so hard to put together. And I mean, if you are someone who's looking to do this and you just want to learn more about this stuff, we do this show every Tuesday night, right around 6 p.m. Eastern Standard Time. Find me on LinkedIn, shoot me a message if there's a particular topic you want me to cover around buying or selling businesses, or if there's a particular type of business deal that you want me to cover, maybe even a specific deal you want me to talk about. Until next time, see you next Tuesday.